evening, ladies and gentlemen, and welcome back to the International Affairs Forum for this month. And thank you all for being here. It's a lovely evening, and it's great to see such a large audience for our guest speaker. Now, we are privileged tonight to have as our guest speaker Dr. Mary Karol Cline. Dr. Cline, we will excuse her that she once worked at the State Department. And actually, she worked in Russian affairs, so she knows quite a bit about that topic. But since then, she has gone on to a career in the think tank world, I would call it, including the Rand Corporation, but also in business. And so she has focused on the politics of energy around the world. I think it's a great opportunity for us to understand a bit more about what's going on in this area that so much affects us every day, our energy prices, and the stability of the energy market. So ladies and gentlemen, please give a warm welcome to Dr. Mary Karol Cline.
Thank you. Well, first of all, I want to thank everyone for having me here. Thank you, Jack, and thank you to the International Affairs Forum. I've looked back at the website and your past speakers, and I've seen, Ambassador Pfeiffer on Ukraine was here last fall. I used to work for him actually at the State Department, and Juan Cole's coming from University of Michigan, expert on the Middle East. Don't know him, I've read a lot about, and I feel honored to be part of that crowd. And in addition, I'm from Michigan. I'm a Flint native, grew up in Grand Blanc, Michigan. Lifelong friend here in the crowd who came to see me, who knows me better, from Friday nights in junior year in high school. But here we are, and so I was flattered and honored to come back to Michigan. I'm a proud Michigan native, and I feel as though there are probably a lot of people in this crowd that have done some really interesting things in the world and landed here, and I'm still trying to figure out how I do that one day. So if you have any ideas, I would definitely be open to that. So we're not here to really talk about me, we're here to talk about the world. And so the last year, it was interesting. I do a lot of it, as Jack had said, I now advise executives in the business community, and a lot went to a couple who were at Davos this year in January, a forum for international executives. And in doing the research to get them briefed to go there, it was fascinating because I looked back at all the other Davos forums, and it was, shaping the global agenda. They have a theme every year. Shaping the global agenda, shaping new business models, understanding the rebalancing of the world, it was all shaping, executing, and this year it was just the global context. So there was this feeling among the business leaders, the political leaders, the social leaders, NGOs, what is going on? And energy prices was a part of that story. Let me see if I can get this. There was actually Edelman, a public affairs firm, they came out with a large study at Davos, and it said, 2014, the year of the unpredictable and the unimaginable. So, it seemed a little extreme to me, but energy prices were definitely one of those unpredictables. And I think I'm not an oil energy economist. I am not an engineer. I'm a political scientist. And I look at what this type of activity means for governments and for governance around the world. And what happened was, we had very stable energy prices since the 2008. There was that huge crash after the financial crisis. But there was a return to stability at around $100, $110 a barrel. And then in July, even at your age group, and you probably won't be happy with me for admitting this about them, but some of the best energy experts I know, and they all were saying there will not be a price collapse in 2014. And why? Because there's going to be supply coming off the market in Libya. There will be supply coming off the market in Iraq. And the Saudis, as the swing state producer, will take supply off the market, as they have almost always done, except for at one other time in the 80s. So none of those things. In fact, I'm teaching a class right now at Georgetown and trying to teach students how to think about, talking to business professionals about what's going to happen in the world. And you have to say, what is going to happen? What is going to happen in the future? And be bold about your call. And your age group was out there with, there will not be a price collapse because of those three things. And all of those things, those supports in the market, did not come to pass. So there was a lowered risk of oil supply outages in Iraq. The supply did not come off the market the way they thought it would in Libya. And then, of course, the Saudis in November decided they were not going to take supply off the market and they were not going to support a higher price environment. So that you see from July to January, you have an over 50% decrease in the price of oil on the world market. And so as I was actually at the local television station today, and she asked about the price of gas. So, and said, what's good for us is bad for others. And I think it really did, you saw that. I mean, I know in DC it was like $4 or $5 a gallon, and now, I can drive up and it's $2.20. So it really, there was this huge surprise and this huge shock. So the thing that I find, again, as a political scientist, I mean, oil price is an economic issue, but it's a geopolitical issue. And if you see in the past, the price of oil really has gone up and down, and the cyclical nature of it has been driven by geopolitics. So if you look at, the first oil embargo in 1973, the Iranian crisis, the 1979 oil shock, the first kind of, and there are a lot of energy analysts out there now looking at that price slide in the 1980s, what they called the first oil glut, looking at a very similar dynamic to what's happening today. And it was actually during that time, too, that Saudi Arabia decided they were not going to support this price environment. And what typically happens with OPEC is that Saudi, as a swing producer, has the supply to have the power over taking oil on and off the market, but they can't get agreement among the other members of OPEC, which is definitely the case today. They would not get a Russia or a Venezuela or other nations to agree to take oil off the market. They can't afford to do it. So you've got the drop in the 2008 oil financial crisis, and then you have three interventions by the Saudis after that to take oil off the market. So, and that stabilized the price until what you see today. And the kind of where is it going is a really, and I think for me as somebody who looks at this from, kind of culling for the political implications of this, because governments, and I know Jack knows, they're not that flexible. And when you have that kind of shock to the system, it's very difficult, especially in oil-producing states, to respond to an entirely new price environment. And I've never seen such divergence in points of view on where the oil price is going now. You have Exxon coming out a couple days ago saying it's stabilized. We're going to be somewhere between 50, 60, 70. And even that, going from 50 to 70, can be the end or beginning of governments around the world. So, there's such a divergence, whereas the Saudis think it may be coming back to 100 in the next year or two. But I haven't seen anyone out there who says, okay, if you see that kind of price slide, we're going to see that kind of increase at that rate, in that same time period. Over 6 months to have a slide of over 50%, we're not going to see $100 oil prices unless there's some major shock or kind of black swan or unpredicted event that happens. So who are the winners and losers in the world? We're here to talk about the world. I want to talk about the winners. I'm an optimist at heart. But certainly, we think of the U.S., we think of the shale revolution, the shale innovation, the technological, but Asia is definitely going to be the winner from the oil price slide. So China, the second largest oil consumer in the world. South Korea, for every 10% drop in oil price, it boosts their GDP by 0.45%. China can realize over $50 billion in savings if oil averages $80 or less in 2015. India is the darling this year. So emerging markets have been all over the place. 3 or 4 years ago, that was where all the hope was. That's where the global growth was going to come from. That was where, the hope was in sustaining higher levels, or for multinationals, the multinationals I talked to were looking for what was the next best market. Now, if you ask people about emerging markets, Brazil, the oil price obviously has had an impact on that country, but India is still the darling. Modi was elected this year, the new prime minister, and coming out with a reform agenda that has excited the international investment community. And if you add the drop in oil prices, as an oil importer, India's outlook looks is much rosier. Indonesia, too, also a new, it looks mixed because they are an oil producer, but they also had an election this year, a new leader, Joko Widodo, who was able, because of the price environment, to take off kind of fuel subsidies, which were a major draw against the budget in Indonesia. So the story, while it's a good news story for the US, it's a very good news story for Asia. So it's a bad news story for Russia. That's what, certainly that's my set point. I think Jack had mentioned I started my career as a Sovietologist at the RAND Corporation back in the late 80s. And Russia, the impact on Russia has been, I think, profound. So we talk a lot about what's happening with the sanctions environment, the collapse of the ruble, but from my perspective, the bulk of the economic crisis and the shock that's happened to the Russian economy has been the drop in the oil price. What's fascinating to me as a political scientist who studied the kind of domestic implications of oil, I was actually looked at, I was talking to Jack about this, we were actually in Russia at the same time. And I wrote my dissertation, which I promised not to. Every time any PhD says, let me tell you my dissertation, I think half the room goes to sleep. But I was looking at the impact of oil within the Russian economy in the 1990s, and there was a lot of optimism at that time about where Russia was going. And the fact that they had the resources, the oil resources, and diamonds, platinum, that could sustain that economy was something that people looked at as a positive factor. Well, at that time, if you were looking at it from an oil perspective, if you looked at almost any other country in the world besides, say, like a UK or a Norway, which had real kind of democratic institutions already in place, oil and extractive industries are not a good thing for development. The resource curse, where it's either economically and impacts the exchange rate, but politically, it sets up a set of incentives that leads to graft or rent seeking, and it's not generally a good thing for development. And at that time, I was not as optimistic as my peers, and I had traveled around Russia, and there are 89 different regions of Russia, and looked at the regions that were dominated by extractive industries and those that were not, and it was the regions where they were dominated by the defense industry, actually. It was one of those big, a surprise, like Vladimir, which was a defense industrial town, was actually putting in place the institutional structure to try to draw in foreign investment. And it just seemed like an anomaly to me. I had almost expected the opposite, and it was not that way. And I ended up calling it kind of the Avis we try harder theory of development, where if you did not have the resources, you did not have the access to the income and money that came with extractive industries, you did not have the incentive to reform. And that is, the essence of the kind of political side of the resource curse, and Russia has succumbed to it. So the interesting thing about it is what typically happens is that you get a response. So, bad governance if there is a democratic response, or even in lots of cases where there is not, like even the Arab Spring, where there is a mechanism through which governments end. And I think this was the slide I took from a colleague of mine. I was teaching last night, and he came to my class from APCO. It's a public affairs firm in DC, and he showed this slide, which is actually kind of, it challenges what we think about politics and economics. I mean, as you can see, as the economic growth has declined, the support for Putin has increased. So it's just I was intrigued by the slide. I also thought I kind of liked the way he set it up, and I love that picture of Putin, who seems healthy there. I don't know if anyone followed that story. He disappeared for a while, and we could talk about where I think he was, but I don't know. I think he's probably a dad now again, so sure. So Russia. Russia is a loser. Russia needs over $100 a barrel to keep their budget and on track, and it doesn't look like it's going to be there in quite some time. You know, in the Middle East, you've got Saudi Arabia also is not, you know, there was at one time, these figures do kind of go all over the place, but Saudi Arabia has saved an enormous amount of resources in sovereign wealth funds that, you know, in one estimate I saw, they could keep themselves going even at lower oil prices for something that was something like 65 years. So they're not threatened in the way that, say, a Russia or a Venezuela or an Iran, whose the kind of the price at which it makes sense for them is $120, $130 a barrel. So so I think, in a sense, is this kind of, did we get what we asked for? You know, and I don't know, I'm sure some of you too have said this to your children, or you've been told this yourself if you're, by your parents if you're a student. Be careful when you get what you ask for. Is that what you wanted? And I think every president since the oil embargo in 1973 has had this call for energy security. We have to get off our oil addiction. We have to get off this dependence on Middle East oil. And, you know, it makes sense when the Saudis used oil as Saudis, or OPEC, I should say, used oil as a weapon in 1973. It makes a lot of sense. When your economy runs on oil, it makes a lot of sense. But just recently, so I've moved back recently from Dubai. I lived in Dubai, which actually is an interesting place. It is not, all those big buildings are not built by oil. Dubai ran out of oil about 5 to 7 years ago. And the building in Dubai was about trying to draw people, almost like my Vladimir story, where the kind of Avis, we try harder. What were we going to do after the oil is gone? So Abu Dhabi has the oil. It's another emirate. But Dubai did not have the oil. And I was there. I was at the Dubai School of Government. And it was so interesting to see it from their perspective, because all the insecurity they felt was on their side. They felt that the consumer had the power. And at that time, this was before the Shale revolution, which nobody was talking about that. I mean, there were whispers about it, but I don't think anybody thought it would have this level of impact this quickly. It was about renewables. And when you know, the 2008 campaign and part of Barack Obama's platform was getting off Middle East oil in 10 years. That almost felt like a challenge to undermine the governments in the Middle East. Now, I understand the kind of the political scene there, that, you know, it's too much and it funds you know, undemocratic forms of government. But from their perspective, that was really all they had. So the power was in our hands. And there was a huge emphasis and an initiative to look for alternative resources. And in fact, if you look, even GE, actually, they just finished in the last few months initiative on solar farms in Saudi Arabia. And I think one of the statistics, which I find stunning, is kind of 0.4% of the the land area in Saudi Arabia in the desert, if farmed from a solar perspective, putting the costs aside right now, could power, Europe 4 times over. So they were very focused on looking at alternative sources of energy. And a friend of mine who a well-respected oil analyst in Dubai, he was writing at that time about the kind of myth of the energy crisis. And he said, we have to remember that a Saudi Arabia without oil does not look like Japan. It looks like Yemen. And if you look at some of the insecurity in the Middle East, you don't want the oil revenues to continue to support regimes that are undemocratic or undermine the citizenship in the country, but you also can't produce the kind of shock that results in instability. I mean, declining powers are almost and even more dangerous than those that are on the rise. So again, this was actually, I always found this so interesting when I was in Dubai, because there was so much talk about the reliance on Middle East oil and I remember listening to some of the conversations actually in Congress at that time about how the Middle East controlled our energy policy. And at that time, our biggest oil, where we got the most oil was from Canada. So there was actually one congressman who said, why do we keep giving our hard-earned dollars to those despots? And I was thinking, well, today, Harper in Canada is not what you think of. So where do we go from here? So as a political scientist, again, I don't have any, I can't tell you what the gas price will be next year or the year after or the year after. But what I do look at is kind of the drivers behind supply and the drivers behind demand. And if you look at both of those sides of the story, it does look to me as though we aren't moving off the kind of current price environment. And so the kind of geopolitical balance that will settle in will be tumultuous, but from the perspective of the drivers of demand and supply, it looks to me as though I don't see where it's going to be going back up to $100 a barrel, and I certainly don't see where it'll be down at 20 or 10 or $15 a barrel. So what I mean by drivers of supply, so drivers of supply, how much more oil, will oil come off the market? I mean, if the Saudis do decide to start to take oil off the market, then yes, there would be a shock. But we had an agreement with Iran, say, at the end of this month. If that happens, there could be at some point, although we don't know when, it wouldn't be automatic, oil back onto the market from the Iranians. On the U.S. side, the current price environment probably will regulate to some extent over time. We haven't seen it yet. The IEA came out the other day saying they were surprised to see how resilient some of the smaller producers were in the U.S. But that should over time regulate that type of supply onto the market. Demand, do we see increased demand drivers? So a lot of the increase in the oil price too, there was a perception of, the emerging markets were going to take off, and that was going to drive increased demand for oil, which was going to drive in a price environment in which oil is finite. You're going to get an increase in price. But if you look at, say, the China story and the emerging market story now, you don't see the kind of demand drivers that people were predicting early on. Again, I was going to say on the U.S. side, if you really take a look at the kind of impact that the shale revolution has had, it certainly is here to stay. So, I would suggest, and I'm not alone in this, is that even if the Saudis decided to take, or the OPEC decided to take supply off the market, they probably don't control the market to the same extent that they used to. I think that the statistic that's out there now is it's only around 20 to 30% of the oil supply. So, you look at what's happened from the U.S. side, there really is a kind of a shock of our own that we've created in terms of supply on the market. So that's really, again, I hate to leave you with a big question like, is it going up, is it going down? It might just stay the same. But I think that the real story is not so much the oil price, but now that the shock has happened, what happens geopolitically? And how does the U.S. manage basically being an oil producer as opposed to an oil consumer in that market, and looking at the markets that will see incredible shocks to the system, such as we see in Venezuela now and in the Middle East and Russia itself, and trying to manage that instability. So with that, I think I will take some questions. How'd I do? Looking at the time.
Thank you very much. And let me start with this chart you've got up here right now, because it demonstrates a bit of data that I wasn't previously.
Sorry about that.
So we took it down.
Right
It showed
now.
that shale oil production in the 60s was more than today, and I'm very surprised by that data point. We've been told that the shale oil is something new that's going on here in the United States, but this seems, there it is again, that this seems to suggest that no, it's actually just recovering. Do you know what that represents, or maybe there's someone in the audience who knows what that story is?
Yeah, well, I think really the point of this too is that from 1960 to 1970, we added a less amount than, say, from 2010 to 2014. So to get a sense of the shock from the last 4 to 5 years. That is, like I said, I am not an oil kind of economist, and this came from the Energy Information Administration, so I don't know that I have the right answer for that one.
Go ahead. We need a microphone. Bring it.
Crude oil total, or is this shale oil? Crude oil, 60 and 70.
Take
Crude
a
oil.
microphone. Take the microphone down there, would you please? And this gentleman might be able to clarify it for us. There you go.
The title says field production of crude oil.
Yeah.
I mean, the larger title is shale oil has
I see.
boomed in
I
the
see.
last 3 years, but I think the graph is actually total crude oil.
Crude oil, okay.
In U.S., which would match 60 to 70 is when Alaska came online, which is where that last big bump was.
Okay. Thank you very much for that. Now, do we have questions from the audience or comments? Here's a gentleman in the front here. Don't go too far away. Okay. We have a microphone in the back.
Just looking at it from the finance perspective, you had a chart that talked about the price of oil, and I thought something that would be interesting is if you overlaid the U.S. currency with that chart. So you talked about the oil embargo and how they used it as a tool, but if you think about monetary policy in the United States, when Nixon delinked the dollar from gold in '71, the oil embargo was a response to reckless spending from guns and butter. And if you look at the current environment, you have the quickest rise in the history of the US dollar over the last 7 months, which coincided with the largest net long position in oil's contracts in July when the price topped out. So those people have been squeezed out. And I guess the other thing, when you look at the production, is if you think about the amount of debt that's been raised in the last 5 years to support that production, it's $580 billion. And a lot of those producers borrowed at 10%, 8%, et cetera. And so the likelihood that they're going to be able to meet their drilling costs probably doesn't last. And with their hedges coming off, because most producers go about a year out, those hedges will start to roll off aggressively over the next 6 months. And if their per barrel cost is $60, it seems unlikely they would continue to produce. So I guess when you look at it from the political scientist aspect, which you presented, I think it's really interesting. Do you take any of those finance aspects into consideration? Because when you mold it all together, I think it adds more to the overall picture.
Yeah, I mean, I think some of the dynamic you're talking about the corrective or supply coming off, I mean, will have a downward impact on the pricing environment. But the currency price has been a huge political issue. The currency issue has been a huge political issue, particularly for emerging markets, or even the wanting a warning when QE, the quantitative easing, was going to end. I mean, the idea that we make these decisions in a vacuum is over in a globalized world, and you find a lot of emerging markets who feel as though part of the situation that they're in, their own currencies are collapsing as the dollar is increasing. Has a lot to do with our own monetary policy. So yes, I mean, there certainly is a lot of political implications from our own monetary policy, and I'm not sure that, and I think we've tried to be more transparent about it, about where it's going. But in terms of how that it moves with the oil price as part of financial dynamic, but taking those separately now, I think it's not something that I'm particularly focused on.
Every place I've been in the world, regular gasoline is more expensive than diesel. This is the only country in the world where diesel is sold at a higher price. Can you tell us why?
That I do not know. That I can't. No. Yeah. If that was the case in Russia, I might be able to help you out. But no, I do not know the answer to that.
It's a conspiracy against Volkswagen, I think.
Yeah.
Hello. The cost of production, isn't it below the market price, especially if it's fracked from the shale? And the second part of the question is, it seems like the lower price is really causing so much harm in Russia that it has some characteristics of a Cold War.
Right. So you're asking if the kind of political aggression is a result of the lower oil price. So we have characteristics of the Cold War given the lower price environment. Is that what you're saying? Yeah, I mean, it was interesting, when I was looking in preparation for this talk, when I was looking at the, that 1980s oil slide and the oil glut at that time, and that was really when I was first in the Soviet Union in 1986, and, watching that all fall apart, there still is, and I among them, were writing at the time of the relationship between the oil price slide at that time and the falling part of the Soviet Union. So it doesn't necessarily mean that increased aggression would be a result of the oil price slide. I do think that the Russian-Ukrainian crisis and Putin's behavior is a kind of a perfect storm with the Ukrainian crisis, but I don't actually see those two events as related. It's interesting. I do see the oil price issue as something that we've seen, given what I'd said before, the decision of OPEC, and particularly the Saudis, not to take supply off the market, and the increased supply of the U.S. So in a sense, it's made the situation much, much worse within Russia at a time when I think actually Putin and his advisors and cronies were probably thinking they could maintain a much more independent and non-Western and non-integrated and aggressive stance. And if you can pay for that, and if you can maintain an economy and you're not going to draw down your kind of rainy day funds, it may be a much more rational decision. And the kind of coming together of that level of aggression and the decrease in oil price, I think was, in some sense, bad luck. I mean, I hate to say it, that it was, was not foreseen, but certainly the Russians didn't see, a $50 oil price at this time in over a 6-month period. So I really do decouple those two issues only in the sense of cause and effect, but certainly now that it's all upon us, it completely changes the outlook for the Russian economy. And even yesterday I noted, GM has decided to close their factory, the automobile factory in St. Petersburg, and it's something that I'm talking about with a lot of our clients, is that even if you could get over the current geopolitical crisis with Ukraine, which I think is here to stay, I think there is it's either going to freeze or get worse. I don't see a lot of options for it getting better. Even if you could take that out of the picture, you're not looking at a Russian kind of recovery economically for 2, 3, 4 years. And I think basically that was a very decisive moment on the part of GM and Mary Barra to say, look, we're not in it for the long run. We can't afford to lose that type of income. So revenue. So yeah, I think it's very interesting that it all happened at the same time, but I do decouple those issues.
It still was related to the price. Because
Use the microphone, please, so we get it recorded.
The price of production is below the market price. I don't think that it's at or higher than the market price. I think the price of production is actually lower.
For the Russians?
Well, it depends on where it's coming from, whether it's the shale oil or the Russian oil or the oil in the Gulf of Mexico. It has a different production cost.
Right, yeah, I don't think that their price of production is actually lower than the current market price.
Over here, on the right.
Is there an international consciousness or even consensus that peak oil is past?
I'm sorry, where was it? That what?
Is there an international consciousness of the fact or even a consensus that peak oil has already passed?
Yeah, definitely. What is so interesting about that is this energy analyst that I had mentioned, Robin Mills, and for those of you who are in this field and following it on a daily basis, I would, I don't know if you're on Twitter, but I would follow him. He's a fantastic oil analyst out of Dubai, and he wrote a book in 2008. It was 2008 on the myth of I had mentioned it, the myth of the energy crisis, and talked about the technological possibilities, and that so much of the oil price has fluctuated with perceptions of demand and perceptions of supply. And that not only was he arguing, and he couldn't know this, he didn't have a crystal ball, but that there was a lot more conventional resources than we had planned for, but also the unconventional possibilities and the potential of technology. And he happened to be right. And I think he was the only one saying it. He was saying it at a time when oil was recovering, but going to $110 a barrel. So he, I think he was very he had a lot of foresight, and the peak oil theory, I don't know anybody who prescribes to that anymore. So it really, it made a lot of sense at the time, but I think given the both scientific and geological discoveries that I don't know anybody who still prescribes to that.
In the beginning, you mentioned the winners and the losers, and you had pointed out the United States as being a winner. And now at the end, we're a producer, so there's a little...
Yeah.
So now...
Ambiguity.
You have that right, the ambiguity. But I'm curious about the shale production, which is more expensive, I believe, than the price of oil today. It's probably $60 or $70 a barrel for shale, $42 a barrel to buy it on the market. But we're stockpiling it like crazy, I believe. So we're storing the oil anyway. And you mentioned Canada. I'm going to tie this all together. our good neighbors in the north. And I was wondering if there's anything in your horizon on Keystone and the pipeline and how that'll play out going into the future. And
Yeah.
Go ahead.
No, I was going to say, that's actually, you know, it's funny, it's a topic before this week when I was thinking about this talk, I thought, should I bring up Keystone? And I made that kind of a conscious decision not to do it because it's such a political
Just to
topic.
clarify, this is the Keystone pipeline that is stalled. The approval has not been given yet by the State Department to build the pipeline from Canada, the shale oil deposits in Canada, down to the Gulf of Mexico.
Right. Yeah, and I think, and if the firm I was working at Raise Group, it was that constant, the permissions, it's about to come, it's about to come, it's about to come. And so with the change in pricing, you know, the thought being it doesn't make sense anyway from an economic perspective, so why take the chance on the environmental side? But my sense, and again, I'm not an oil economist, but that these decisions about this type of infrastructure investment is done on a much longer time frame. And the kind of scenario that I'm talking about, or the post-peak oil, is a kind of all hands on deck scenario where you still are, you know, China's not going to grow at 10 or 12% over the next, you know, 5 to 10 years, but it's still going to grow, you know, 5, 6, 7%. It's huge demand on energy resources. Emerging markets are still going to grow. It's not going to be, not all of them, but some of them will. So the kind of demand for energy resources is still going to increase. It's just that the supply is able, you know, for the most part, should be able, given what we know now, be able to meet that demand. And so from a kind of feasibility and economic rationality standpoint, I think the case for Keystone was done on a much longer time frame. It's become so political, and not even just about the environmental implications, which are very real, and some very powerful groups feel very strongly about that, and have been successful in stopping it from being approved. But you know, it becomes who gets the win. And in Washington's environment right now, so close to the election season, you know, even trade agreements, which I thought, like TPP, the trade agreement, that I thought was a slam dunk between the U.S., Canada, Latin American countries, some Asian countries, has gotten involved in this kind of who gets the win. Are we getting too close to the election for something like that happen? And in my opinion, this is not, again, I'm not an oil economist. I think Keystone has also gotten wrapped up in that. So it's kind of the most apolitical answer I can probably give you.
Just to add one word about pipelines, though, Keystone is somewhat unique in that it's an international pipeline, therefore requiring the State Department's approval. Internal U.S. pipelines from Bakken area, from North Dakota, are being built at a very high rate. And so anyone who's concerned about shale oil being transported in the United States, what they're doing is they're trying to get out of the business of shipping it by rail, and that they're doing that by building more pipelines in the U.S. So that's not constrained by the Keystone discussion. Microphone over here.
If we make the assumption that we'll have low oil prices for the next 12 to 24 months, what do you forecast as the specific impacts on the Russian economy in that event?
You know, I think that, you know, the Russian economy, they have kind of 3 different kind of rainy day funds, which they're already drawing down. You know, I think they can withstand. I think you're going to see this incredibly difficult, you know, almost like what we saw in the mid to late 90s. For me, the interesting question is really how long can this odd disconnect between where the economy is going and can it muddle through and political support for the regime. As a political scientist, I find that incredibly perplexing, even in an environment in which Putin and the people around him have taken steps all along to to rein in the media, to make sure that the message is the message they want. And I just feel as though there's been enough of openness and travel and an understanding of what things can be like, that these 80% support figures, I don't know how you feel about it, Jack, but I'm so suspicious of it. And it feels to me it's one of those things that could go in a minute if there was the right kind of political power in play. And I have to say, when Nemtsov, you probably knew him too, but it was so sad to see what happened, being gunned down in the midnight on a street in Moscow. And as a longtime Russia hand, I have to say I was shocked. It said I'd met him, I had known him, and I was surprised by the reaction. I felt as though there would be a march, and there was, with thousands of people, but I thought it would be a protest. And it was really a mourning. It was sad. It was people walking silently, and it looked to me as though it was almost like mourning for the country itself, or mourning for the situation they're in. There wasn't this sense of, just has to stop. This was the final straw. And even then I was just looking and hoping for a kind of sign that that couldn't go on for that much longer. So, I guess the answer to your question is that, I think that the economy can muddle through in some sense. I don't think, and I'm actually waiting for the kind of political response to that. So, and if there's, if the run out of these rainy day funds, we're back to the kind of a default scenario in which, if they can lose, savings overnight and whatnot. I have to be surprised that even the Russian people do not have patience for that.
Shifting to our own hemisphere, you identified losers in South America, and 3 of them, major countries in South America, undergoing a lot of political stress now, very abruptly. And could you comment on that and its relationship with energy situation?
Rousseff, for instance, in Brazil, so she wins by a very narrow margin, the president of Brazil, recently. And again, I feel like it's similar. It's not Russia and certainly not Putin, but similar in the sense that the energy price was not of her making or of her doing, but such an awful coincidence that happens with a governing crisis. She's facing a corruption crisis with Petrobras, the state-owned oil firm, and real governing crisis with the growth of a middle class in Brazil and the inability of the government to basically respond, a kind of governance gap to respond to the demands of the middle class, whether it be increased healthcare, transport, infrastructure. So, there was a crisis that was going to exist from a governance perspective in Brazil anyway. And then when you add on this kind of price collapse, I think it's just like fuel to the fire. So it's a shame, because I think that we're on a trajectory for growth, and Brazil is going to be a very tough market. I don't feel the same about Venezuela is, on the edge of collapse. And that, even today, I was looking in preparation for this, that with like 69% inflation, an iPhone is $11,000. So how long that can last, I think that's a day-to-day situation. Mexico is somewhat different. I think it really does, it deflates the reform ambition of a young Peña Nieto, went into that position looking to actually open up, not privatize, but open up the energy industry in Mexico. And there was a lot, they used to be, it was 2 years ago, now everyone's talking about India, everybody was talking about Mexico. It was Mexico was going to be the big surprise. Mexico had their sights on, a governing structure that was going to decrease corruption. It was opening up the oil industry. And then, it's a shame the kind of challenges in terms of corruption and crime have really undermined that regime. And then with the oil prices going down, the investment they don't have the level of interest in the investment in the industry that they were hoping for. So it's a little bit more mixed. I mean, I still do believe that they have the right, policy approach in place in Mexico for a really good news story, but they don't have, they haven't had the time frame, they haven't had the results quick enough to get the rest of the population to believe in it. So that's a kind of on-watch story for me.
I don't know where the microphones are. They're
Right here.
Thank you.
With the dropping cost of oil and our current production levels being, so great, and the ramifications of the losses that will be affected to our central U.S. Industry, is it a little myopic of the president to be pushing so unbelievably hard on the PV and wind side this week? Is that literally posturing, in a sense, to leverage the Iran situation?
Yeah, it's interesting. I have thought about that quite a bit because, when Barack Obama was running in 2008, there was a speech I watched where he talked about how the U.S. economy went from trance to shock. Like, when the oil prices are low, we're in kind of a trance, and it impacts decisions on what kind of car we drive, what kind of the decisions we make, whether it probably seems crazy because it's not that related, but like even leaving the lights on. For some reason, I was thinking, oh my gosh. Energy crisis, got to turn the lights off, which is a total 1970s person. It was like that, under Carter, everyone you had to conserve in every way. And the idea is to make the right changes at the height of a cycle, right? So it almost never happens, but the research kind of on governance is if you're going to make reforms and the right ones for the long term, you got to do it when you're feeling good, not when you're sick. And the sense I get to address your question directly is that if we have an environment in which we're in an age of abundance, so to speak, giving up these initiatives or the focus on other renewable energy sources is probably short-sighted. I mean, if it doesn't make economic sense to do it, it's going to be hard to support in the long run. But certainly having the ability to do that type of research is kind of who we are. And in fact, it was so interesting. Today, it was in the Financial Times, there was a discussion about an energy program, and I'm going to forget the name, AREBA, or it was an advanced research energy agency for a battery power, like some new battery. And it was funded by the US government because it's not like economically feasible right now. And it talked about that kind of innovation that needs to be supported if we're going to come up with the newest, best, latest thing. And I thought, I felt really proud of that. Like, that is really the essence of why we have the shale revolution in this country, and it doesn't exist almost anywhere else, even where they've tried. And in the first places where, and it's run as far as, and there are a lot of oil people or energy people in this crowd that know more about this than I do from a technical perspective, but it's all small, from what I understand, very small, small companies who are involved, and you've got the larger ones involved in Europe, and they're cutting back immediately because of the price environment. So you have this culture of innovation, and in fact, I'm going to add one other fact to that. Mikhail Friedman, who is an oligarch in Russia and is actually in the news all the time right now about trying to purchase in the North Sea energy supply or energy resources, but he wrote an article, an op-ed, talking about why the shale revolution happened here, and he talked about how it wasn't a technological. It was in the end, but that was a consequence of the environment and the incentives for innovation and the kind of open and free thought. And I was I have to say I was shocked. I mean, he's not one of these oligarchs that's kind of next to Putin and whispering in his ear, but he brought it back to, it wasn't necessarily our technological knowledge, it was our drive for innovation and our ability to pursue that when we see that there's opportunity. And that's how I feel about the renewable side of it, the wind. And yeah, I mean, to throw a lot of money into it right now may not be economically the right decision, but to make sure that we have those capabilities and we encourage that kind of innovation and thinking, I think is important for us not to give up on.
David, you got a question, and then we'll have time for one more question over here. I believe there's a hand up.
This on? Just talking to it. Did an awful long-winded question there on the photovoltaic and wind energy and stuff like that. It seemed to ignore the concept that we're talking about burning fossil fuels and all the damage it's doing also. And just because it's cheap doesn't mean it's the best way we should be going. It probably might be a good time, because when oil prices are low, that we could do a good investment. I'm also was more concerned, your earlier graph you had up there, price of crude, it shows, we had this price and it's stable and things like that, but if you look at it, despite the rapid fluctuations we had for a few events, okay, it would jump up, it would drop down with the economic crash and things like that, and right now we did this other dip. But if you look at it, the gradual graph, the trend line shows that it's going to still be going up. We may experience a couple, 2, 3, 4 years at best, I would say, before it jumps back up again. So what are we doing to get ahead of that would be our first question. The big problem I would be more concerned about is your other graph about winners and losers around the world. Okay, Russia's a loser, Brazil is a loser, things like that. China is a winner right now because of low prices. We may be, because we are on the winner side, we're feeling good about this, but we may be driving a lot of these other trade relationships we have, partnerships with other countries. We may be driving them into new partnerships with different groups. So when this starts to pick up again, we may be looking at a real tight relationship now with China and Brazil, for instance. They both could win out of this. I mean, the new canal that they're building and stuff like that would be a very big concern. The other thing that you missed, apparently, you mentioned a bit about peak oil. Nobody's mentioning it, but I just heard it just a week or so ago. They're not talking peak oil from the same perspective anymore. What they're talking about now is peak oil per capita, which has actually dropped considerably. We're no longer increasing on that, because the world population has grown so much in the last few years. The amount of crude available per person is actually down. So again, I'm looking at where we're going to be going and who the partnerships are going to be. That'd be the political thing I would be most concerned about in the future now here. Mm-hmm. We may win for a few years and end up losers when it's over.
Thank you.
Yeah. No, I think that's exactly, and again, to the point on innovation. But, what was interesting about that graph, when you look at those dips and the kind of peaks and valleys, with the 1970s and the oil embargo, and it was all, as I was mentioning, Carter, it was all conservation. The response was conservation, conservation, conservation. And then in the 80s, it was about stockpiling, stockpile resources to create energy security against any shock. And now it is about conservation and renewable energy. And I think that's the big fear of losing the debate around what are the environmental implications of our energy environment. And, I'm going to tell Robin after tonight he's going to have to pay me for the amount of times I've mentioned him tonight. Just go read his book. But he, in discussions I've had with him too, is that if we can turn the kind of technological attention toward the environmental consequences, such as carbon sequestration or taking carbon out of the air, actually looking at the real consequences of using more oil to fuel kind of economic growth and whatnot, that would be the most rational thing to do. Again, I think the one thing that was most surprising about this whole environment, you could not find, even Juan Cole, who was going to be here next, I just reread his book on engaging the Muslim world, and it's so interesting to see how focused we all are and have been on the relationship and the increasing dependence on the Middle East and the oil from the Middle East. And what nobody predicted was the technological innovation that allowed such extraction from from areas where we couldn't actually extract energy supplies of oil or gas. And so it's just it's a big question mark. And again, I'm not one of those people who thinks that technology is going to solve anything and necessity is the mother of invention. But it does seem as though if we continue on the path that we're on, you're right, absolutely. The biggest risk is losing the focus on the actual consequences of the low price environment, going back into that trance instead of the shock.
Last question over here on the left.
As I understand, ISIS has been selling oil on the black market in order to fund their operation. Do you think there are forces that are keeping the price of oil low in order to disrupt their financing of their operation?
Yes. It's an interesting, it's a very interesting question, actually. And last night I asked a colleague of mine who's an expert on terrorist organizations and ISIS, and asking about will the low price environment actually undermine what they're doing? And that would have to be a consequence of having that kind of strategy. And his opinion, it was there is a lot of things that are going to undermine ISIS, and oil, the low price of oil would be one of them. But the inability to govern, the inability to take control of the spaces that they've actually moved into, that there are a lot of things that will undermine them in the long run. It won't just be low oil prices. They were selling it actually under the market anyway. But from the perspective of, is it a strategy to undermine their ability to finance what they're doing? I don't know the answer to that. I mean, it's a really, really interesting question. I don't think that would be the only reason why, say OPEC is keeping supply off the market, but it will impact their finances in the end.
Thank you all very much, and thank you, Dr. Mary Carol.